Our next guest is focused on the long game. He has founded a stock exchange that prioritizes long-term and sustainability goals for companies over short-term gains. It's an idea that some of the world's biggest financial minds have proposed. Maybe you saw the op-ed in the Wall Street Journal. Warren Buffett and JP Morgan CEO Jamie Dimon argued that short-term thinking is harmful. Their quote in the op-ed was, "In our experience, quarterly earnings guidance often leads to an unhealthy focus on short-term profits at the expense of long-term strategy growth and sustainability." Let's welcome Eric Ries. He's the founder and CEO of the Long-Term Stock Exchange, also known as LTSE. Eric, good to see you. Thank you for joining us today.
Thanks for having me.
So you have two companies listed so far, software company Twilio and Asana, the cloud-based company. What does it mean to be listed on your exchange? How will people notice the difference that they're listed there and not elsewhere?
So these companies are dual listing. They're still accessing liquidity through NASDAQ and NYSE as before. But they are committing to listing standards that we have at LTSE around, as you mentioned, investments in the long term, sustainability, diversity, et cetera. So it's like being held to a higher standard, showing that these are companies that care a lot about the impact they have on the world, all of their stakeholders, their employees, their communities, vendors, and so on.
But and in fact, yes, they are both listed at the New York Stock Exchange. Regulatory-wise, they both still have to submit quarterly reports, don't they? I mean, this is exactly what CEOs have been championing a bit about. They don't want to have to think short term, but yet they still do if they're listed on some of these other exchanges, right?
Yeah, well, quarterly reporting is a federal rule. So, reform in this area comes slowly and gradually. We put long-term right in the name of the company to remind ourselves to be patient. So this is a step-by-step reform. We're trying to get companies, their boards, and more importantly, their employees really focused on what is the value of the company going to be years, decades, and generations from now, not just what happens in the coming quarter.
So, Eric, a report from Morgan Stanley last month found that retail traders are just about 10% of the market right now. At the height of the pandemic, 15%. Your exchange, you don't allow retail trading. Now, I know two great minds, Warren Buffett and Jamie Dimon, they agree with you that short-term trading is a problem. But are you worried by freezing out these retail investors, there might be some negative impact not only to your exchange, but to the companies that list?
Well, that's not correct. All exchanges, the New York Stock Exchange, LTSE, NASDAQ, they all work by having member firms, sell-side brokers as members. So LTSE-listed stocks can be accessed by retail investors in the exact same way that they access NYSE and NASDAQ stocks.
So can they access it through a Robinhood or something like that?
I'm sorry?
Can they, let's say a stock's only listed on your exchange. Can they go on Robinhood and buy the stock?
Absolutely.
All right. Well, excuse me for that misunderstanding there. But just in
That's
general.
No problem. But you're right that access to investment opportunities by retail investors has been declining. The total number of public companies has declined a lot in the last 25 years. And so one of the trends that we think is really important is to bring more investment opportunities to the public markets so that people can be investing for the long term. Because people investing for their retirement, endowments, pension funds, these are very naturally long-term actors. So I think putting them at the center of our capital markets wouldn't be such a bad idea.
Shepard Smith here. Thanks for watching CNBC on YouTube.